Let's move on to the markets right now. The NSE All Share Index extended its recent gains in today's session. Leading the market higher were shares of Guinness, Nigeria, Dangote Cement, Total, and Nigerian breweries. High-flying Transcorp also closed the day higher. Joining me to break down the trading day is Victor Ogunwoye, his CEO of Partnership Investment Company. Thank you very much, Victor, for joining us. So, Victor,
thank you very much for having me.
To pick some momentum today, and I want to get your thoughts about the drivers of that, because we saw the likes of Nigerian breweries, Guinness, some stocks that people think are already quite pricey right now, gaining in today's session. Also, Dangote Cement was also among the gainers. What do you think is causing this bullish run we're seeing in the market right now?
I think there are two things. One is the fact that there's a lot of money now in the market. Liquidity has come suddenly because there was an anticipation that the MPC might tighten a little bit more. Because that they did not tighten, they left everything as it is, has actually changed the sentiments in the market. And again, you will notice that in the last few days, Transcorp has also been, heading up. And that seems to have infected everybody in the market, and people are joining in. And they're beginning to see that there's value in some of the stocks. I must say that there are still some worries around some of the very high PE ratios.
Yeah.
But if you remove Dangote Cement and maybe Nestle, you see that number goes down, considerably. So I think brokers are looking at all those, and they are looking at the fact that liquidity seems to have flowed into the market. There's been a very tight liquidity situation in the last few weeks.
Right.
And there was an expectation that the MPC might do even more tightening. But I think in view of the fact that inflation seems to be behaving and is going down, that influenced that decision to keep rates at where they are and not tighten any further.
Right. What are your thoughts on 40 oil? It seems to have turned the corner now, in a bad way, if you like. That stock is up over 1,000%, and now we're seeing it fall back today.
Well, the truth is that nobody can say exactly what the new information is that is moving it. Right. So I think that's what happened today. At least in the case of Transcorp, we can see some information around some of the things they are doing and some of the things that the market can perceive as might give value in the future. But Fort Oil is a little bit different. So I think we'll wait to see. Maybe when they bring us some more information, we'll know exactly what information they have that everybody else don't have.
All right, let's talk a bit about Dangote Flour. Of course, that is the company that has been acquired by Tiger Brands. They are the major shareholders there. Now, they have reported, again, really bad numbers. We've seen a loss of well over 8 billion naira for the first 9 months of this year, and that's added to the losses we saw last year. And one expects that this should be a bit of a turnaround story with a new investor. Your thoughts about this stock, and are you one of those that thinks that this is something that could turn around next year?
Yes, I think it's too early to. Don't forget that Tiger Brand is a much more enhanced. They have a lot of brands that they would like to push through this market. Coming into Dangote was to be an entry point and also to be able to use it as a distribution for so many other brands. I think we have to wait. When new investors come into a place, you want to do some cleaning. All the costs that they had incurred, and some of the things, you can look at assets differently. They can look at certain things and say, look, let's just take this away. But I believe it's just the house cleaning that they've done. And next year we should see, when they are really set up, we should see in another year or two, we should see a better performance from them. All
right, we'll be tracking that, and hopefully, like you mentioned, we'll see an improvement in those numbers. But let's now talk a bit about the market going into next year and how bullish you are. What are your thoughts about what we're likely to see in this market next year? Should we be buying equities aggressively now, or do you think the market is likely to trade sideways and for most of this year and the first quarter of next year?
Well, the truth is that what has started now, I think this bullishness, you saw what happened last year. I think we are going to carry it on a little bit to the new year. Again, don't forget that next year we are going to start seeing money coming out of everywhere because of election year. There's always a run-up of things when election year is coming. And when it's getting closer, people try to close in. So my expectation is that this quarter and the first quarter of the year will be solid. We still have some gains, except for those stocks that are already overpriced in terms of their very high PE ratios. But other than that, we should see, don't forget that we're seeing a movement. If you take, like I said before, if you take out Dangote Cement and take out Nestle, you find that there's a lot of value in some of the other stocks that haven't come. Financials have done relatively well. You can see that almost everybody reporting third quarter has had a very, more or less, everybody is reporting a lower turnover than the year before. However, some of them are able to weather the storm and come out with better profits. But overall, I believe that the market still has a lot of value, and this will come out. People get more confident from the way we've started seeing today. We are going to find that in the first quarter, yes, maybe all the way to half of the quarter. But from third quarter, when the election starts hitting up, people tend to, pull back a bit.
Victor, you said there's a lot of value in the market. Where do you see the most value?
Well, if you look at the major stocks that already have, that you consider very overpriced, are those ones in the consumer goods arena, because everybody is running into those places. And also forget that when we have all the foreign investors are coming in, they want to go into stocks that they know. They want to buy Cadbury, they want to buy MBL, they want to buy Nestle. So those have tended to push those prices up and leaving every other thing there. If you look at the financial sector, there is a lot of headwinds now that people are seeing in terms of regulation and some of the controls. But don't forget that this is still a very fresh market for banking to thrive. The coverage of banks in Nigeria is still very low. So there's still, in my opinion, I still believe that some of the banking stocks are going to do a lot better.
All right, so
because yes.
You're saying the banking stocks is where you...
Yes, okay, even though there are problems, but there are in terms of coping with regulation and some of the things, but there is a value that we
right. So Victor, in that space, which stocks do you like the most? In the banking space, which stocks do you like the most?
If you ask me, I without trying to be market, try to do advertisement for them, but I think that some of the bigger banks that are now getting space, First Bank, Zenith, GCB, Access, they are all going to settle down. EcoBank, they are going to settle down a bit. And after they settle down, you are going to see that they will start doing a lot more than they are doing now. Because there's a lot to cover. There's still a lot of development. They've all come out of a very terrible situation. They've all just, they are coping with all these regulations that are coming out. Now that everybody is sure that the system seems to be stabilizing, they are all going to do well. And of course, we are going to see that. And then we also begin to see a diversification. If you see some of the smaller banks are realizing that we can't compete for everything. Let's focus on the retail side. And let's do this. So we are going to see those kinds of things, make a difference in the near future.
Earlier, you mentioned that you think the market is likely to trade higher into the first quarter of next year. But if we see more monetary tightening next year, which is a possibility given the tone of the last MPC communique, do you think this is something that's going to hurt that rally?
Oh, yes. But if you look at, I think what the MPC committee was worried most about is inflation. They are very strict about ensuring that inflation doesn't take hold. And what they've done a good job in doing that, and they've seen that actually inflation is going down. So the expectation is that inflation will remain within their band of 6 to 9%. If it remains there, then they won't have any need to tighten more than they have tightened down. But if going to an election year, they need to really be watchful of all the money that's coming to the market. And if it gets out of hand, say at the end of first quarter, that's why I could say my visibility, I can only look at up to the end of first quarter. From the second quarter, you don't know what is going to happen. If they see the liquidity really become an issue, they probably tighten a little bit more, and that will hurt the markets.